Hi guys, how's it going? It's Alrotom checking and welcome back to my YouTube channel. I've been investing consistently for a year now, and there are things that I have learned, and I will be sharing that today and also share how I will be investing this year. In my very first YouTube video, I did mention that I will be sharing my personal finance journey, and in doing so, I hope that somebody get inspired and start their own journey as well. Please note that I am not a financial advisor, so none of my videos constitute as financial advice. So you all know how down I am for dividend investing, and my plan was and still is to use my investments to earn passive income. And with stock market investing, dividend investing strategy is the right one because you get income or get paid for staying invested and doing nothing actually. That is why it is good for you to adopt dividend investing strategy if you are looking to get passive income from your investments. However, this strategy has its own disadvantages. If you are investing to get rich quicker or to gain more wealth as fast as you can, this strategy is not the one for you, or it's just not the one at all. And reason being that, as I've mentioned multiple times in my previous videos, that dividend investing strategy has minimal capital appreciation. So it is not going to reward you in the way that you want to be rewarded if you are looking for capital appreciation. Because of the dividends that these companies pay out, they don't use that money to invest back into the business for it to grow, so they pay it out to investors. That's why you'll find that stocks or ETFs that are for dividends don't have much in capital appreciation. So what is going to get you there is capital appreciation, and this simply means an increase in share price, and as a result your investment value also increases. So you'll have to adopt the growth investing strategy instead of dividend investing strategy. And these are two different strategies with different purposes. However, you can do both. There is no rule that you have to do only dividend investing or you have to do growth investing. You can structure your portfolio to give you dividends and still give you capital appreciation. And honestly, this is the point that I'm at, because I realized that in as much as I am getting dividends, my portfolio performance is low. So the only way I am making money is through dividends. And when I compare the dividends that I get and with the growth percentage of other ETFs, I am honestly losing. I could do better. My portfolio could do better. And guys, the stock market is a money printing machine. So don't just invest because it's the right thing to do. Invest because you want to get something out of it, and that is money. So choose stocks or ETFs that you know are going to make money. And I know that you cannot really be so sure that you are going to get this much in dividends or capital appreciation, but there are ETFs that you know that in the long run are going to yield you good returns. And personally, I refuse to stay invested in something that I know is making me lose money, especially when there are other options I can freely and easily go to. And one thing I love about Easyequities investing is that it's a do-it-yourself type of investing, so you are in control. You can jump from one stock or ETF to the other. Remember, the goal is to make money, not to just stay invested. So now I'm gonna go into my Easyequities account so you guys can see what I am talking about and try to explain how I will be investing this year. So in my TFSA, I am heavily invested in the Citrix DV ETF, as you can see, and I want to change this because it weighs down my portfolio performance. For example, I am currently on 3% loss, which is 300, and if I had this money invested in the S&P 500, I would be on 800 gain, because currently my S&P is up 10%. And honestly, when you invest in these ETFs that track the whole market or growth ETFs, you hardly go wrong with them. So my portfolio would perform better if I had more in the S&P 500, and it pays dividends even though it has a low dividend yield of 1%, which I don't mind at all because it has great capital appreciation. And first ranked global 1.2, and Nasdaq would put me in a better position as well, because global 1.2 now is up 9% and the Nasdaq 100 is up 16%. So this year I really want to get onto the growth side of investing, and that does not mean I am abandoning dividend investing strategy. I could never. I love dividends so much. So I'm just trying to take advantage of both strategies and make money from them. So with the Citrix DV ETF, as much as I am not going to prioritize it this year, I'm aiming to have 12,000 rands in it, because if I have that much, I will get 1,000 rand in dividends. So my goal has always been to hit 4 figures in dividends, and I'm not so far from it, and I plan to use those dividends to invest into the ETFs that I have mentioned, the S&P 500, the Nasdaq 100, and the First Trend Global 1.2. So I am going to prioritize them because I want my portfolio to perform way better this year, and also max out my TFSA because tax benefits, guys, tax benefits. And I know in my last video I mentioned that I might sell or stop contributing towards Nasdaq 100. Guys, I changed my mind. I changed my mind because I think at the time I was just overthinking it, that one day I'll have to withdraw from my TFSA and I'm going to lose out on the tax benefits. And honestly, guys, if we think about it, the reason why we are investing is to use this money to help us someday. So I am going to contribute into the Nasdaq 100 in my TFSA, and if I happen to need money in the future or use it to live off of it, then I'm not going to be taxed. So I will continue to have it, and if I ever get to max out my TFSA, then I will invest in it in the ZAR account. And on there as well, as I've mentioned in my last video, should my capital gains get to 40,000, I am going to withdraw it at 40,000 because there's an annual exclusion on the capital gains tax, so I will be dodging tax legally though. So yes, guys, that is how I will be investing this year. I'm going to be more into growth investing and also keep my Citrix DV because I love dividends. So that's what I am going to do, play both strategies. And yeah, guys, that is the end of the video. Thank you so much for watching. Don't forget to like, comment and subscribe, and comment down below on how you are investing this year and see what I can learn from you, what I can do and what I won't do. Thank you so much for watching, guys. Once again, see you in my next one. Bye.